Hi friends, welcome back to Stockwood channel, a channel where we discuss investing strategies with facts. So friends, today I'll be talking about the textile sector in India, and I'll be breaking this video into two segments, where in the first segment I'll be talking about the textile sector in India as a whole, what is the current status, and some of the government initiatives that has been taken related to this industry. And in the second and the third, I'll be talking about two stocks which investors can look out and invest. Right. To start with the textile sector in India, you might be knowing that the textile sector is one of the oldest and also the largest sector in India. And some of the data points is it currently employs almost 4.5 crore workers in India, and also it contributes almost 7% of the industry output. This is as per FY 2018-19. And also in the textile industry and apparel industry together, it contributes just around 2% of the GDP, while the export earning is close to 12%. Right. So these are some of the data points about the textile industry, and now let us see what are some of the government support or initiatives that the government has taken for this industry. Right. So as you know, there is the production linked initiative that the government has taken for various industry. So the government has extended this particular scheme for the textile industry also, that will actually boost the manufacturing and increase the export of the textile industry. Right. And then you also the government of India has come up with several export promotion policies in the textile sectors, and also it has allowed 100% FDI in this sector, which will automatically help to boost the revenues and profits for this particular industry. Right. And also one other initiative that the government has taken is a scheme for integrated textile parks, where it is a hub for textile industries, which will actually encourage more and more textile companies to set up in this particular parks. And also it will create an ecosystem which will actually help the existing players in the industry also to for better operations, and also that will in turn increase the profit of these companies. Right. So these initiatives actually is currently not reflecting because of some of the headwinds in the COVID period, and others. You can clearly see here the export of in the textile industry has come down in the past few years, but it is expected to touch almost 65,000 crores in FY26. So the potential for this industry is huge, and some of the government initiatives that I just spoke will actually help the textile sector to bounce back and further increase its revenues and profits in the coming days. So now with that, let's move to some of the stock analysis in this sector. So friends, before we move into the stock analysis, a humble request from my side to like and subscribe this video, so that it encourages me to come with more such videos in the future. Right. So the stock which we are discussing today is one in the textile industry, which is basically its main products is yarns and fabric. It produces a wide range of yarns and fabric. If you can see here, it is classified among the specialty yarns, acrylic, fancy, and hand knitted yarns, dyed yarns, and gray yarns. Yeah, right. And also 49% of its revenue comes from export, and it has many clients in the domestic market as well as the international market. You can see some of the major brands like Raymond's, Arrow, and Van Hassen, and Walmart. Right. And coming to the technicals of this stock, this stock has actually rallied significantly in the last couple of years. You can see here in 2019 it was trading around 200 levels, and it has given a huge rally to 550, and it has corrected recently and trading close to its 200 day moving average around 450 piece. Right, and also if you see the valuation, it is quite attractive. If you see the Indian PE for this company is around 10. So currently it is trading below the median PE, 3-year median PE around 9. Right, and also if you see the quarterly results, it is currently looking good. It has improved from March 2019, where it was around 1,700 crores, and currently it is around 2,600 crores. So also another point is here, during the COVID period, it has seen sharp correction in its revenues and also the profits. But post that, it has reached its pre-COVID levels around December 2020, and it has further increased to 2,600 crores. Right, and also if you see the net profit, it is doing profitably. The current last quarter profits is almost at its highest levels. Right, and also one other important point that investors has to note is the balance sheet, that is in the borrowings or the debts. Right, the company has repaid some of its existing debt, and it has reduced its debt considerably to around 1,700 crores. So the key takeaway from this is the company is in the right path of reducing its debts, so that it will increase its margins in the coming days. So also one other point that investors has to note is the shareholding pattern. You can clearly see here the FIS have been a net buyer in this company in December 2021, where it has increased its share in this company by almost 1%. Right. So also the market cap is around 12,900 crores. It is around mid-sized company. And also the more important point that investors has to see here, in the past few years, the return on equity is not very high. It is around 6.5%, and also the ROCE is low, around 7.9%. So with this understanding, the company which I am talking about is Vardhan Textiles. Right, so let's move to stock number two. And here, if investors are interested to make good or handsome returns, this is the company that the investors has to look at. So let us look into some of the key fundamentals of this company. Right, so this company is also one of the largest in the mid segment histories in India. That is basically the companies that will deal with socks and daily wear products. And the company has around 100 products across 16 brands. And the company mainly manufactures through its plants located in Punjab, Tamil Nadu, and West Bengal. Right, the company also manufactures 100% of its products in house. That is a key advantage, that it has very less dependency on other players. So if you see the revenue mix by geography, just 7% of its revenue comes from the export market, while it is majorly domestic. Almost 93% of its revenue comes from the domestic market. In the export, it exports almost to 46 countries, mainly in the low income countries like Africa and some countries in Middle East. And it has very limited presence in high income countries like Western Europe and North America. Right, and also if you see the domestic market, a majority of its revenue comes in north and the eastern part of the country, but it has a huge potential to grow its market share in the southern market. So the key takeaway from this particular slide is, the company has a huge area for improvement in its revenues and profit. Mainly it has unexplored market in the foreign market, especially in the North America region and the Western Europe region. And also in the southern market, southern India, it has a very low presence. So it has a good potential to increase its revenue in the future days. And also this company is around 7,400 crores of market cap, and the ROCE and ROE is quite attractive, around 36 and 31%. right? And if you see the technicals of this company has also given a huge run up from the levels of around 1500 in May 2019 to it has reached its peak of around 4500, and then it has corrected considerably, almost by 50% to 2500, right? And it is currently trading below its 200-day moving average, and this is a very good time for investors to aggregate or invest in this company, right? And also if you see the quarterly results, again the same scenario, it has increased its revenues or sales considerably in the last 10 quarters. It is peak around 658 crores, and the profit is also has tripled in the last 10 quarters. And also if you see the valuation, it is very attractive, friend, of almost p of around 38 recently in September 2021, and now it has reached a very low profit to earning ratio of almost 20, which is almost way below its 3-year median of 26. And also if you see the borrowings of this company, it is very minimal for this revenue. It has a very low debt of almost 144 crores. And the company I'm talking about is Lux Industries. So you might have heard about this company. And also, if some of the other points I want to bring about is it has spending a lot of money in terms of increasing its brand value by employing some of the celebrities like Varun Dhawan and Virat Kohli and Amitabh Bachchan. And also, one of the other important thing that the company is doing is following the footstep of some of the bigger players in this industry by coming up with this kind of outlets in various parts of the country, so it also can cater to the high income group category. All right, friends, with this I think I'll end this video. Please hit the like button and subscribe to my channel. I'll see you in the next video. Thank you.